Buddy. So we got a pretty full day today. The ECB and the European Union, they kind of break it apart into two different groups now. I just throw it all over into one big lump and say England, or central bankers, which is the title of this morning briefing. Central bankers are going to be talking in just a few minutes. The European session goes into the first part of our morning. So it's always really good to pay attention to Canada and Europe this early in the day. I started a few minutes early so that I could do a little commercial. Gotta put the hype out. We're constantly working on creating new content, new material. There's been a lull lately because we were focused on bringing out a new Discord. But I think that's on hold, and we're just going to continue to build out the next level library from right on the website. The type of questions that I see on a day-to-day basis in our chat room would be answered by people who watch the morning briefings and come over and check out the next level library. The content in here, especially I'll hit the options. This was a project of mine when I first got hired at the Bullish Bears. They didn't have a next level library when I got hired, and I created it. It was my task at the time. So 95% of all of the next level material when it comes to the options is my contribution. And at first we didn't quite know what kind of videos we wanted, so they were really long, and I put every little bit of information that I had on strike selections, days to expiration, decay rate, how to uh, how to monitor or change or adjust a trade, every single thing that I could put in. And so they ended up being hour-long videos, and I've always monitored the complaints from people so that we can do better. And the complaints that always came out on the options is way too advanced with too much in one video. So we've been going back and breaking the videos apart, making them shorter and hitting one topic at a time. But think about that complaint. I don't really see it as a negative. People were saying, this is so advanced, I don't understand it. And yet, the one complaint that we usually see from a new person who shows up at the Bullish Bears is that they've looked all over the place and they can't find good material. They can't find strategies. They can't find tactics. They don't have stuff on the internet that will help them get into advanced content. And this content is so advanced, everybody's complaining that they don't understand it. So we have been working on a transition from introduction to options, and then advanced options, and then this. So that's three different branches of options material. Once we're done with the options, we're going to be doing the same thing with futures, because I trade futures a lot of different ways, not just looking at futures as a way to get in and out contract by contract, but also by trading options on futures. I do basis point trading with futures, and I do spreads. And there's so much more to futures than just buying a contract and hoping that the next candle goes the direction you want it to go. So we're going to be building out the next level futures very similar to the way we did options. Just a shameless little plug, get the commercial in there. And yeah, if you are looking for tactics and strategies and trying to get advanced material, and you are not looking at the next level library, well, it's right there in front of you. You're missing the asset that you paid for. All right. So we want to start with the economic calendar. Every single morning, this is where we start. The move in the dollar yesterday and last night is a little bit in response to the global shock of the just disastrous earnings last night. It wasn't just one company, it was multiple companies, and it shut down this by the dip fueled rally that we were looking at. On top of that, this morning, the ECB over in Europe came out with rate hike info that seems to be shocking the market a little bit over there, too. They're going to be doing a news conference here in just a few minutes, kind of flesh out more of what their decision is based on. But it's a morning of shock and awe. Definitely something you want to keep track of. No, Jimmy, not yet. And that's what I'm saying. When it comes to the futures, I personally don't think that we have made a good enough transition from beginner to advanced. And on options, I've always been the one focused on the advanced material. I didn't do the introductory stuff because there's a million videos out there that do introductory stuff. I left it to others and I focused on the advanced stuff. But as usual, if you want something done right, you got to do it yourself. So I'll be going in and doing the introductory and intermediate options material. So you want to keep your eye on the dollar today. We got the central bankers, we got the Bank of England. Notice how there are two different England branches, right? That it's not all just one lump the way it used to be. Highly anticipated policy announcements, and they are shaking the market this morning. We got the currency pairs kind of holding that lull for the moment. I don't expect that to last. Jobless claims, factory orders, ISM and PSM, uh, PMIs. It's gonna be a day. Um, Violent swings in both directions. We were talking yesterday afternoon, looking at SPY, and when it comes to expected move, it's a square root of time formula, right? So when we're looking at a company and we're asking how far could this move, we can put a date to it. How far could it move in a month? How far could it move in a week? And these expected move ranges are really accurate, and we can dial it in for whatever time frame we want, which means we can do that on a day-to-day basis too. And when I plotted the expected move on a day-to-day basis in SPY yesterday, we hit both edges of that expected move. We hit the top and we hit the bottom in the same day. Now, when you've seen the weekly expected move indicator and we've seen the market reach the edge on a Monday, that's shock enough. But to hit both edges in a single day, it's still very, very violent out there. So keep your eye on these rate decisions on the economics today. Look at how many of them are highlighted dark red, showing that they are anticipated to be impactful. We have a lot of things on the docket. Asia is back online, by the way. Their holiday is over, and we expect their participation. We actually were able to see it last night in Globex. If you're a futures trader and you trade at night, it should have been obvious that there were players back in town again, right? Like doors are open, lights are on, and the music's playing. We may start adding this to the morning briefing. This is Forex Live. I'm not signed in. One of the things about the morning briefing that I take pride in is helping you guys find information that is accurate, insightful, concise, and preferably free, right? Because we don't have to go out and buy more stuff if we don't have to. This was out yesterday. Very concise, precise, and amazing expectation for today's trading. And it included earnings last night, earnings this morning before the bell, and earnings tonight after the bell. And it's free. So this is called Forex Live. I don't know anything about them. I just started looking at them yesterday, but I'm not signed in. I didn't pay for anything. And this is amazing perspective of what we have on the docket today. And it was out yesterday, right? It came out yesterday afternoon. So we may start looking at this more on a day-to-day basis as well. 5 things you need to know. Free Bloomberg publication. They'll actually email this to you every day. You could sign up for it and it wouldn't cost you anything. They talked about that earnings route yesterday afternoon, central bankers this morning, inflation worries, which has got everybody all kind of lit up, the drop yesterday afternoon, and then what we have on the docket today, including the jobless claims and the PMIs. It's a short read. Most of the time, I find this not too helpful unless something like snuck past me and I just didn't catch it. So this is a nice kind of check my check my numbers, make sure I've hit all the boxes kind of thing. But this one, I was really impressed with this. So let's bring it over to Thinkorswim. Come into the Market Watch tab, go to calendar. If your calendar looks like this and it's cluttered and full of all this junk, hit the show all, turn everything off, bring it back on with Econo Day. I just grab that description and bring it so that it's next to the time. Look at the times today, almost every single hour through the morning session, including the additional auctions today at lunch. These are game changer time periods. Can't tell you how many times I've seen the S&P stop on a dime, flip over, and just run completely crazy right at 11:30 or right at 11 o'clock. You don't have to take my word for this either. You can go back and look. Look at how many times right at 11:30 when there was an additional auction that the market just completely changed course and ran like a mad demon. Pay attention to the clock. It's one of the best indicators you could ever get, and it's free. You don't have to code it, you don't have to go get it, and it doesn't matter what broker you're on. You have a clock. Keep your eye on the clock. The market is a machine. A lot of it's connected to the government. The government's a big beast that will do things on the quarter hour, the half hour, and the hour. A lot of institutions code bots that are barely capable of doing anything more than running something like our own stops. They will also code that thing to respond to simple things like half hours and hours, especially when it's connected to additional auctions. So, a full docket, full house today, lots of things on the agenda. And one of the things that makes this critical is the fact that we can keep changing course all morning. So, we're looking at a 2 hour chart of the ES, and you can see that we had broke above the 20 period daily, dipped back down below it, and are coming back above it. Now, when it comes to moving averages, when we're crisscrossing this tight back and forth, it doesn't really hold any weight, right? Because if it was a EMA, maybe we would still be above it. And if it was some other kind of moving average, maybe we'd just be slightly below it. I have a 20, but what if you had a 21 or, what if you had an 18? So don't get too hung up on the fact that we're crisscrossing back and forth through it at the moment. The main thing is we're back at a 20 and we're interacting with it and we need to get through it or get around it or reject off of it and head back the other way. We do have the 10 below us. So if we do break to the downside, we're going to be looking for a reaction at the 10. And we do have the 50 above us. That's the 50 period daily moving average. A 50 daily is like a 10 weekly, right? So something to keep in mind. That's a 10 period weekly. 10 period weekly moving averages are used all over the place in a lot of trading systems and is used to gauge structure, trend, momentum, health. A 10-week moving average is used all over the place. So a 50 daily is just an easier way to look at the market without having to go to a weekly chart, right? It kind of accomplishes the same thing. We got to get through it. It's going to be a major level of resistance over our head. There was some talk about negative gamma, and it was broker delta that they were talking about, right? So it was a good read. I've posted a little bit of what I was reading in the Discord. It's worth going in and taking a look at that. Really kind of grasp the scope and depth of these moves and why these moves are happening. What's causing this massive route in one direction and another? When it comes to volatility, every single institution will tell you that they can't pinpoint how much volatility is coming from market makers versus how many are coming from Forex versus, you know what I mean? Like they can't break it down that way, but they can gauge the scope and depth of the volatility, and they usually do that by looking at the bid-ask spread in things like the SPX. Now, I'm not going to nerd out on you, but it's a good read. Highly recommend just coming over to the large caps channel, scrolling back up just a little bit. You should be able to find that conversation. And I think I shared a link to what I was reading. If I didn't, then I'll post it in there. The main takeaway is we're not done yet. This very well could just be a pullback of a larger dead cat bounce before the rollover and the next leg lower. Right? We don't know for sure. We'll never know until later, right? There's not a whole list of things that could tell us that we're absolutely totally right. So keep your eye on the market today. One of the targets to the downside will be 44.50, and a target to the upside would have to get through that 50 period, and we'll come up to complete this little micro cup at about 46.60. So bring that into the smaller time frame. If we can resolve this expansion pattern, this megaphone pattern, on either side, it's going to take more than just one news, right? It's going to be multiple news throughout the day. And if they are all on the same page, all positive, 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 we could see this continue to move up through the day. If not, and it's positive, negative, negative, positive, or just negative, 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 we're going to see a message, a clear and consistent message in the market. And that's what we're looking for. Yesterday's trading range was fine. I mean, there was trading in there, but if you find trading difficult, this would be a day you wouldn't want to trade. There wasn't a clear and consistent message in the market. And when I use that kind of language, clear and consistent, when you have one time framing, candle after candle after candle, all moving in a particular direction like a trend, it's a lot easier to trade. When it's randomly changing market directions, punching through pivot points, really wide candles, you're going to find it a lot more difficult, right? So for today's trading session, if we get a little bit of positive news out of the EU this morning, looking for a break to the upside through our own Globex high through the open, and then we'll challenge the intraday of yesterday. Notice we are down near 1% already. The ES has an average daily range right now of over 2.25%. ADR, average daily range. It looks back over the last 20 days and says on a day-to-day basis, what's been the average move in the ES? Over 2%. Well, we're not even at 1% yet, so there's still 1% left in here that we could make today. A move to the downside would put us back through the Globex low. There is a COG line at 45.11. So kind of keep your eye on that. And if we were to measure from our current location another 1% to the downside, that would put us below the 4,500 level. So if we start to get negative, that's the downside target. First target past the COG line, 4,500. NASDAQ, after that dip last night, notice we're not really in a megaphone pattern here. We're in a very tight range. So we're going to look to resolve this range. One thing that we absolutely know for sure is that we won't stay in this range, right? That's the one given that we have. We won't stay in this range. So you want to be thinking about, is this range what you really want to trade, or would you rather wait for it to get out of the range? Use your broker. Almost every single one of them that I've ever come across has alerts on it. Set an alert for a price tag on either edge of this range, and then go do something else, right? That way you're not sitting here babysitting, looking at a chart that's not doing what you want, and then trying to convince yourself that trading in the middle of this is worth your time. Don't diddle in the middle, right? Just leave it alone. Catch it on the edge. Set an alert. Give yourself the freedom to get up and get away from that computer for a little bit. A topside break, we moved through this area very, very fast and left a volume node. And I have to say, when it opened up last night, I had two minds about it. One side, I wanted to buy that sucker because if we move that far that fast, it's very likely that we were going to reciprocate and come right back up again. The other mind said, well, the only reason it stopped falling is because we got into the close, and that it was going to open up and continue to fall. It did open up and continue to fall, but not by very much, only another 100 points, only, right? It was only another 100 points. What's 100 points among friends? But it's stabilized. It's holding the low. Keep your eye on the news this morning to see this begin to shake out. Tech is going to hit this, right? It's going to hit it more than the ES, and especially if they're going to rotate out of tech and get into something like finance. Finance can go a lot of different ways. It doesn't just have to be a bank, right? It could be bank, insurance, trading desks, institutions. So when it comes to, swapping out finance, the ES has finance, the Nasdaq 100 does not. So we could see a bifurcated market this morning, a difference between the Nasdaq and the ES in a big way, big difference, right? We had a bifurcated market yesterday a number of times where the Dow was making significant changes on the day in no relation to the other markets, right? It was just doing its own thing. Normally we see that out of the Russell, not the Dow. So, the big fear is when all four of these markets sync up. A synchronized market is one of the most dangerous markets you could ever see. It is the ones that will make the biggest moves in history when they're working together. So when we're bifurcated, then at least we're not making exaggerated moves. They all start to link up and move at the same time in the same way. That's when things become very dangerous, both upside and downside moves. I've been bouncing back and forth between the 10-year and the 30-year within the last week, mainly looking for a cool off in the 10-year to kind of confirm that we were calling a bottom. But if this does flip over, we're just going to go back to the ZB and kind of hang out more there. That's the 30-year again. Notice the extreme moves that we just seen here, even in the last few minutes, right? Hard dump to the downside and an immediate response to the upside. So what do you think is going to happen if this turns around and starts spiking back up to the upside? What's going to happen to, the S&P and the Nasdaq? These are indicators, right? I don't look at the bonds because I'm going to trade them. I'm looking at them because I'm using them for an indicator. The more information you have, the more price you look at, the more you understanding you have of the market going on around you. The dollar got a little violent. Keep your eye on this thing. We don't want to see it begin to make exaggerated extreme moves. And the VIX is starting to cool back off again, but we're still holding above the 20s. We're looking at the S&P 500 pre-market change. We're going to use a filter and knock the names down a little bit so that we're not looking at 500 names. We're going to try to get it around 100 names. Got to adjust the color scheme because it's running at whole numbers. So we're going to move it to tenths. Basically, that just means the colors will kick in sooner, right? So we get rid of a lot of that gray. You can see, we're in a risk off situation. Negativity across the board. There are a few highlighted areas, but not very many. Keep your eye on those financials. They're going to be in play today, and so is energy, right? There's been a lot of energy news, especially with the U.S. reaching out to a lot of different companies in the last few days about energy. Change this one to the NASDAQ 100. We don't need a filter, but we still got to change it to pre-market percent. We'll give it a color adjustment. The FANG names are down. Everything is down. There's a few like the durables down here that look reasonably decent. Maybe a little bit of retail trade, but uh, we just expect it's going to get worse before it gets better. Looking at the screener this morning, if we want to know, like how negative does it really feel out there, you can take something like the S&P. How many names are down? At least 0.5% this morning. 41. So 41% of the S&P 100 is down this morning, gapped down. All right. And if we look at the size of that gap, we've got markets that are down. Okay. Well, I mean, Facebook with its earnings is down 21%. But other than that one, we've got, 3%, 2%, 1% negative moves to the downside this morning. And it's the names in there that are important, right? But not like you're going to go in and pick one name. It's what the name represents. Chip sectors, communications, streaming services. What does it represent? And then can we follow that over to that sector or that industry to have a tradable opportunity? Kind of think about it from this point of view. If we do start to flip back over and start to see finance make a move, and finance is down on the morning, it has a lot of room to run just to get to zero, right? We always talk about, well, it's gone too far. I don't feel comfortable. I think I'm chasing. I want to sit out. If it's down 2% and things start to get positive, it's going to run back up to zero before it starts to go above zero. And that means it really hasn't gone anywhere from where we closed yesterday. So it's not, quote, gone too far. Still gives you a good trade on the day. Uh, I'm going to be keeping my eye on finance and energy. It's the two plays worth doing today. I'm not really interested in trying to short tech, and I really don't see any upside moves in tech. So, finance and energy seem to be the players. Uh, but we start to bring in something like the sectors, and not the legacy S&P sectors, but more of the new kind of sectors that we've been using lately. The electric vehicles market, the chip sector, the, marijuana sector, right? Kind of breaking it down into more than just the old school legacy sectors that are out there. When we bring it from that point of view, nice, finance is starting to turn green. Then we can see this morning the pot stocks are down. Take it over to crypto, also down. Electric vehicles market. So even the alternative sectors are down this morning. And on these sectors that are up, if they're not up at least a half of a percent, then I don't even consider them up at all, right? They're just basically flat. So if you look at it from that point of view, we don't have a sector that's positive this morning. We've only got negative sectors, including Bitcoin. Now, these two columns down at the bottom are weekly options. It's really just one big list, but I can't put one big list on TrendSpider. I had to break it into two lists. And as you can see, there are plenty of names that are tradable this morning. We've got markets on the move with some really good names. So plenty of trading out there, but you're going to have to really be a stock picker today, right? This is a stock picker's market. You're not going to be able to lean on the sectors and, you know, uh, find your opportunities from there. So that's what I've got, everybody. Be careful, be safe, and I will see you all later.